Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's another day of records for the markets. The Nifty gains for the fifth straight day in a row. The index moves towards the 11,500 mark, led by corporate banks. ICICI Bank rises to six-month high. The lender clarified to the exchanges that it has made complete disclosure of its bad loans. Morgan Stanley, too, has given it a thumbs up. SRF gains for the fifth straight day after the management in an analyst call said its packaging division has started to deliver strong growth. And Eicher Motor is the only Nifty company to report its earnings today. Price hikes and product mix may aid realizations in the first quarter.
And we watch out for that. Likely that the numbers might come out post-market hours too out there. Viewers, thanks for tuning in to Countdown. My name is Neeraj Shah. And let's pull up the markets. About 0.25% higher for the Nifty. So, well, a steady day today. You could probably see some gyrations with some very narrow band. The Sensex 0.4%, the Nifty Bank at 0.8% is packing a serious punch, and frankly, it's all about banks in today's session as well. Large, mid, small on the PSU side and the corporate-facing bank side. Almost everything is doing really well for itself. Let me dwell on the index first for a bit. The heat map will come up on your screen, and you will see banks, ICICI Bank and the others perched right up here. So Axis, SBI, ICICI Bank, three names out here doing extremely well for themselves. So a good start and a good day. They've maintained their gains today. There's some strength into Hindalco. The last 2 or 3 sessions, it's arguably been the stock of the week, at least in the large cap end of the market. But even Stevens, as far as the breadth goes. What about the losers? Bharti corrects about 4%. Yesterday's winner, ONGC, corrects a bit in trade today, down about 2% in trade. Titan a couple of percentage points down in trade, as is Cipla, post-result reaction out there. UPL marginally off, and HDFC Bank is slightly soft in trade. But the sentiment not altogether bad, and the sentiment is fairly decent at the broader end of the spectrum as well. If you just look at the key trends today, aside of course the PSU banks that I spoke about, a bunch of other result reactions and stocks which are moving up on good volume. So firstly, the result reactions, NMDC corrects about 7%. Nalco, on the other hand, extremely strong numbers and up about 6% in trade. And you have some strength in HCC in the session today. It's also there in the volume buzzers list, HCC. The volume's much higher than what the average volumes are. What else? Hathway and Den, now 2 days or 3 days in a row, are buzzing. Up about 7 or 8% for Hathway in the session today. Den is about 6%. And yesterday's session too, these stocks were up and about. So good going for these names. And stocks which are trading at 52-week highs. The one that really stands out is Page Industries, up another 5% in trade. It may be trading at whatever, 65, 70, 80, 90 times, depending on what year and what multiple you're willing, what EPS you're willing to assign to it. But just no respite. And Navneet, it's fabulous for a stock which fell like a rock in the month of Jan and Feb, down to about 18, 19,000. From there, it's been a 50% retracement for arguably one of the most expensive stocks in the country.
The rally came in after they renewed their contract with Jockey going ahead. But okay, that's good going for Page Industries. But overall, I'll say good going for the markets. We've been touching fresh highs almost every single day. And today itself, we're staring at the 11,500 mark on Nifty. No major build-up seen, but we've been highlighting this for you, that the premium actually on the Nifty futures has been declining. So right now, it's just somewhere about 12 to 14, but definitely in the intraday session, it has gone up from 7 to 8 points to almost 13 points. What remains in focus is Bank Nifty. Neeraj highlighted corporate-facing banks are doing well, and in fact, a major contribution on Nifty, the reason why it's in green is because of ICICI Bank. Had it not been for ICICI Bank, probably the index would have been flattish in trade, 15% higher in terms of OI build-up on the futures. But let's see, usually in the last hour of trade, we tend to see some bit of unwinding. Also, today's the day for the Bank Nifty weekly options expiry. The data was telling me it could be in that range of 28,000 to 28,300 on the upside, but we already surpassed that level. Let's see. Right now, Bank Nifty is somewhere about 28,266. In terms of open interest, in terms of option strikes for Nifty, we could be heading towards the 11,500 mark, but PCR is telling you that the markets are right now in an overbought zone. So 11,500 call as well as put, both are very active in trade. In fact, if you club the premium of both, it's somewhere about 225, which is definitely giving you a range of 220 points on either side going ahead, at least in the near term. Otherwise, put writing continues for 11,300 and the 400 strikes. Very quickly, let me take you through just 3 stock futures. ICICI Bank has to be mentioned today, considering the rally that we've seen for this one. It's a top contributor in Nifty, and the stock's up nearly 12% in the last 5 trading sessions. Futures, however, right now are trading with slight bit of discount. The other one is Nalco, which came out with the numbers. They reported highest ever EBITDA of 1,000 crore this time around, so watch out for this one. And the volumes are pretty high on the cash side. The blue line, that's the AVAT function of Bloomberg, is giving you the average volumes of last 20 days, whereas the white one is indicative volume for today. So watch out for Nalco. Fresh longs have been seen here. And ACC is the other one, where there's been some bit of OI surge. Stock 2 is trading in the positive territory with gains of almost 1.5 to 2%. Some long positions seen for ACC in today's session.
Let's talk about all of that with Shailendra Kumar, Director and CIO at Narnolia Securities, joins us right now on the show. Mr. Kumar, good having you. Thanks so much for joining in. One can't talk about what's happening in the markets the last 2 or 3 sessions, or maybe the last 7-8 sessions, without talking about the one distinct trend. Corporate-facing banks, even some PSU banks, are now starting to find favor and consistent favor. How have you looked at this slight dichotomy over the last 15-20 days compared to what we've seen for the better part of the last 6 months, arguably the better part of the last 18 months?
Yeah, so corporate lenders, if you can remember, since 2012 this NPA cycle started. In financial year 12-13, you saw NPA getting added every quarter to all the corporate lender, PSU or maybe the private bank lender as well, which is more exposed to corporate segment. Now look at this quarter. There was a belief in the beginning of the year as well that this calendar year will be a lot to do with how corporate lender behaves, and there was a high probability scenario built by many analysts including us that second half of this financial year FY19 will see NPA topping out sometime, Q1 of FY19 or Q2 or Q3 at the max. So there can be a difference about some quarter here and there, but largely the NPA cycle looks close to topping out, right? Couple of results which has come this quarter, like Canara Bank, for example, that clearly exhibits that the pain of large slippages and large provisioning every quarter is closer to the end of the cycle. So and otherwise, if you look at many of the corporate lender, their loan book is growing decently at 10 to 15% in the different range. The pre-provisioning operating profit for many of the corporate lender were close to 15% plus. It was the large slippages and large provisioning below the pre-provisioning operating profit, because of which the PAT was very bad, consequently impacting the share prices of these corporate lender. This quarter is for a change, and many, say even ICICI, the kind of disclosure they come out with, or even Axis Bank, if you look at the last con call, they are suggesting very clearly that close to a quarter or two, this large slippages will go off, and once the slippages reduces, provisioning reduces in turn, and then optically the profit will start looking very handsome in year-on-year growth basis. So what market is factoring right now is this kind of scenario for second half of the financial year.
Okay, Shailendra, in that case, what's the top pick of Narnolia Securities when it comes to the banking sector?
Okay, as I said, among the corporate lender, the bank that we have continuously recommended to our clients and to our portfolio as well had been Axis Bank. Look at the Axis Bank. Look at all what is the maximum extent of possibility of NPA going up for a company like Axis Bank. So BB rated portfolio and below BB rated is just 2.1% of the loan book, right? The kind of hefty provisioning they have done quarter after quarter recently, now the PCR, the provisioning coverage ratio is 69%. That gives a cushion for them. So even if 1 or 2 quarter, again slippage is very high, the high PCR will make sure that the provisioning is not in turn very high. So that's another positive. Look at the loan growth side. Now almost half of the loan book of Axis Bank is towards retail segment, where the growth is almost 22% CAGR, right? Even in the corporate book, which they have reduced consciously in the last 3 years, their exposure to the AAA, the A-rated and above corporate is close to 80% now. So all in all, books looks very much clean. The balance looks much cleaner than it was, say, a year back, right? And still the valuation, if you look at it in terms of say last 10 years valuation band, it is giving you good amount of upside. Once the NPA cycle gets over, when the profit optically starts appearing better, say in closer to end of FY19 and the beginning of FY20, the kind of price to book re-rating which can happen to the corporate lender like Axis Bank could give you some kind of sufficiently upside cushion for somebody holding these stocks, even from current level, I would say.
Okay, so that's the top call on Axis Bank in the banking sector from Narnolia Securities with the price target of nearly 664. But what about the markets, the earnings that have come by? Do you see any fear of, markets being overbought at current levels? Currently, if you look at Nifty, it is trading at very high valuation. So what's been the assessment, Shailendra, so far of the earnings? Do you expect any sort of upgrade? Because there were certain earnings which were above what the street was expecting.
Yeah, right. So this first quarter FY19 is a lot different than what the first quarter FY18 or FY17 or 16 was. So every financial year in the beginning, we analysis is to start with a very high EPS estimate for Nifty for the financial year, right? And after the quarterly numbers, the first quarter result, we used to see a decline in the earning estimate for the whole financial year. This used to remain there for the second quarter, third quarter, and by the time we used to close the fourth quarter, the realized EPS of the Nifty used to be much, much lower than what the consensus was at the beginning of first quarter, right? Now, FY19 is behaving a little differently in this sense. So we have started about 23-24% kind of a consensus EPS estimate growth for FY19. Again, the first quarter is different in the sense that the cut in the EPS estimate is not that large. Still there is a cut. So ICICI Bank, Bharti, Vedanta, couple of stock has, Tata Motors for that matter, like, has seen good amount of earning estimate downgrade, because of which again this year there is a downgrade going to happen after the first quarter results end. But the downgrade will be very small, maybe a 2%, 2 to 3% kind of a downgrade, unlike 6-7% kind of a downgrade we used to witness in last 3 calendar year. So that is helping the market remaining buoyant post results, right? Number one. Having said that, we are trading close to 21 times FY19 earning. What our base belief is, like, market for foreseeable future, based upon good economic outlook and backed by a lot of strong domestic inflow, we would be trading in the range of 18 times to 22 times in 1 year forward earning sense. Now, if we look at next 1 year forward earning, which is FY19, right now trading at 21 means the upside is very small. So it could be about 5 to 6% closer to 12,000 is the upside. But there is a large downside from here. So risk reward ratio, as we are going higher from current level of 11,450, the risk reward ratio starts becoming disfavorable. So one has to be very careful about this. Having said that, this again, if there is some kind of a fall, it would be a buying opportunity, because we are structurally in a run where the earning growth of Indian corporate, whether large cap or the mid cap, is structurally going to be very strong next 3-5 years. So valuation will keep kicking in, and some kind of a small correction would be 8-9% will be there in the market again and again. But there are all the correction of 8-10% would be a great buying opportunity for investors in Indian market right now also.
Look at the stocks which have gained on good volumes today on the NSE 500, and the names don't inspire too much of confidence, to be honest. Hindustan Construction, maybe results led or otherwise, but that stock is up about 12. Then there is Reliance Communication, there is Hathway Cable, there is Nalco, there is DLF, Den Networks, Union Bank, Sobha, IOB, BOB. Page Industries way down there, up 5%, but in the 12th place as far as companies on which both the price and volumes have seen a bit of an uptick. So the rally doesn't somehow seem to inspire too much of confidence, at least at the broader end of the spectrum. Mr. Kumar, one final question from my end, and that is on some of the metal names and the results that have come out. I mean, we've seen National Aluminum Company post a robust quarter. That stock is up 7.5. Hindalco post the performance from Novelis the last 2 or 3 days has been on a bit of a roll. What's your call on the base metals currently?
See, base metal, ultimately what happens, how the globally alumina prices moves. The Nestle Aluminium is all about how the alumina prices are moving on the LMEs. So as an investor, if somebody is having a 2-3 year time horizon, then you have to take a lot of if and but kind of a scenario that what the alumina prices will be after a year and 2 years. If there is some kind of escalation in the trade war which is happening right now among various countries, it becomes very difficult to create an investment hypothesis for 3 years for a company like National Aluminium. Tactically, whenever there is a quarterly kind of a jump in alumina prices, there will be some kind of a rally in these stocks. But you have to be very, you have to be timer in terms of fundamental as well. So when you enter in these stocks and when you exit, you have to be very smart into this. Logically, for a long-term retail investor, I would say these are not very, these are not kind of a segment. You should put your money for wealth creation in a longer-term horizon.
Okay, Shailendra, we leave it at that note. Thanks a lot for joining us and taking us through your views on the markets. And clearly, NALCO numbers, the reaction in terms of stock price movement has been quite positive. They posted highest ever EBITDA for the quarter of 1,000 crores, 7.5% increase for this one. Clearly, now standalone Hindalco's number would be in focus. And remember, NALCO's number were good because of high alumina prices. But since we're talking about earnings, let's just pull up 8K Miles as well. The company came out with the numbers. If you look at the earnings so far on sequential basis, the revenues for the quarter were up 6%. The profits were higher despite of some bit of margin contraction which was seen. That was due to higher other income as well as lower taxes, and margins contracted to 29.9 versus 33.38. Let's check with the management what was the reason for margin contraction this time around. We're joined by Suresh Venkatachari, who's the chairman and CEO of the company. Hi, Mr. Venkatachari. Good afternoon to you, and thanks a lot for joining us today on BloombergQuint. Could you tell us what was the prime reason for margin contraction in the quarter gone by?
No, there is no margin contraction actually. If you see, actually, we have still maintaining about a 34-35% EBITDA margin. We are still having that.
Tell us what was the margins for the June quarter then?
The June quarter is around 88 crores actually, EBITDA margin. EBITDA margin is 88 crores on the 240 crores.
Okay. Also,
so which is around actually 36.6, which is an enhancement of compared to the previous quarter.
All right. What were the other key highlights of the quarter gone by? You guys have been putting a lot of importance towards the fintech vertical, and I believe you also secured your first customer with regard to the blockchain platform. Any more updates on that front?
Yeah, we are growing, having a good momentum in our cloud transformation business in the highly regulated industries in the pharma and healthcare. And apart from that, this quarter we made a good inroad into two key financial tech customers, and also secured a first customer for our healthcare blockchain platform. So these are the key aspects which will be able to deliver much more revenues in the Q3 and Q4 of this year. And also our geographical expansion in Europe is leading us to get a good number of clientele. And also we plan to open up our Singaporean operation headquartered out of Singapore for regional business, including Asia Pac and Japan.
Mr. Venkatachari, sorry, just to get one small confusion out of the way. Your revenue number was 240 crores?
Yes.
And your EBIT, not EBITDA, but EBIT, the number was about 71.8 crores, right? If I'm not wrong?
No, EBITDA, see, because you need to take, because we also amortize and also at the same time we also capitalize actually. So it is 88 crores is the EBITDA.
Which would be EBITDA, yeah. But EBIT, I think, was at about 71.8. And which is why I think our calculations on the EBIT margins were 29.9.
No, if you compare if you compare with the previous quarter, also it would be similar range.
Okay, the EBIT somehow margins number came up to 76 crores on that base of 227 crores. Nevertheless, I just wanted this clarification. Anyways, one small question about how the client wins have been in this quarter thus far, and how does the outlook look like?
So we added a one more $1 billion customer in this quarter.
Did I hear $1 billion customer?
Million dollar customer.
Okay.
And also our expansion in Europe is started paying off. We have been about 3-4 customers, and also we have signed 3 new MSAs with the large enterprise customers. So that business will be started coming in this quarter and next quarters. So these are the, in addition to also some focus on the governmental business in the US, government and state business, we started looking at it, opportunities.
Interesting. So you would be a starting off player of sorts, smaller sized. Would the ticket sizes and the IRRs on these contracts in the US government be smaller compared to what some of the other players would enjoy?
Can you repeat the question? Sorry.
Because you have just started looking at the US government orders, and you are relatively a newer player. By nature of that, I believe the size of the contract wins as well as the margins on which you win those contracts would be smaller.
Not necessarily, because we have aligned a partnership with one of the company which has a huge government expertise for over several years. So they are our partner in delivering that, because they have the governmental license in 8K and all the necessary license for the government. And we become the mentor and a prodigy kind of relationship. So we would able to enjoy a larger contract. There is no restriction on the size of the contract. However, government opportunities take a little longer than a commercial opportunity. It requires a lot of more time, but the wins could be a large amount, and also it will be for a multi-year contracts. It's a huge potential opportunity, but government revenue, significant government revenue will come over a period of a time. In terms of the margin, there is always a pressure for a government business. But however, since we are deploying our cloud-based platforms, we would able to sustain a decent level of profitability compared to other peers.
Sir, just taking that point forward of the cloud-based business of yours, I think you were also looking for some bit of acquisition in US. Any updates on that?
Yeah, we are looking at currently a healthcare company, in addition to add a portfolio of our customers, which will bring us another 40-odd customers more into our hospital, which will bring us to somewhere between 120 to 140 hospitals will be our clients in the US. And also it enhances our additional domain expertise of certain more EMRs. So we could able to run most of the EMR as a service on a long-term recurring revenue model.
And could you give us a timeline by when will this acquisition fructify?
So we are looking at probably in the next 2 to 3 months.
I know it's early for me to ask, but if you could just give us what would be the size, just a range, what would be the size of this acquisition?
At the moment, I'm not able to privilege to disclose, because since all the document is going on and due diligence is going on.
No worries, Mr. Venkatachari. But any other acquisition besides this healthcare player in US that you're looking at?
Not at all right now.
One final question. What's the guidance you can leave us with?
So we see whatever our investment happening in the blockchain and also in the artificial intelligence, all will lead into better accelerated growth in the Q3, Q4 and the following year. So you would able to see a better numbers coming in the Q3 onwards.
Okay, we'll leave it at that. Thank you so much for joining us and giving us that perspective. Well, that's the view from 8K miles. Hopeful, not giving out an exact number, but hopeful of numbers looking okay going ahead. Nevertheless, what else? As we've been talking about, it's a day that's belonged to banks. I think banks, by and large, seem to have done really well for themselves. But you can't take your eyes off ICICI Bank. That's the top gainer on the Nifty after it made a full clarification about its bad loans and accounting policies, and maybe a note or two from the brokerage side as well. So let's try and find out if that is indeed what's aiding the sentiment here. Shraddha Babla is here with an analysis. Shraddha, in the morning, all of us were surprised. 7% on ICICI Bank out of the blue without there being any apparent reason. Now, what's the cause for this bullishness? And not just necessarily in ICICI Bank. I think across the sphere, corporate-facing banks are doing well.
That's correct, Neeraj. So as far as the immediate triggers are concerned for ICICI Bank, there could be two possible reasons, and then I'm also going to talk about the broader possibility. But what they've done is yesterday in disclosure to the stock exchanges late evening, they have clarified on making full disclosures on their bad loans and accounting policies. And this comes on the back of a Mint report which says that the bank had masked its bad loans via a change in the accounting policy for FY17. So if it were not for that change, the bad loans or NPAs for the bank would have been higher. And they also said that this change in policy was not communicated to investors, which is required by RBI and SEBI rules. So now ICICI Bank has made that a clarification and said that they had made full disclosures on the loan assets and the unsecured portion of doubtful debts in financial statements and annual reports. So that could be one reason. That apart, you also had a Morgan Stanley note which was released, and where they say that the stock has the potential to double in a period of 2 years, as they expect the bank to move from focusing on impairment to normalization and to the growth mode. While they do see some volatility in the short term, they've said that the risk reward favorable given the valuation of 1.2 times FY20 price to book value is in the favor of investors, and the margin of safety is very high at these valuations. They've also pointed out that the foreign ownership in the stock at 60% is near its 15-year low, and for them ICICI Bank's weight in the Asia Bank's portfolio is 15%, the heaviest of a single stock. In fact, the target price of 460 on the stock is also the highest according to Bloomberg consensus. But largely overall, what could be aiding sentiment for the bank, especially after the first quarter numbers, where we did see that the net stressed assets and slippages coming down, is the well capitalized aspect. So on capitalization, there is no concern, unlike in the case of PSU banks, and there is no risk of equity dilution. That apart, retail portfolio is now as much as 57% of the total loan book. So the valuation support is what works in argument of ICICI Bank, and not just ICICI Bank, but also the large corporate heavy banks like SBI, Bank of Baroda and Axis Bank, all of these which have given a positive return in the last 1 month since the earnings season began. On the other hand, we did see HDFC Bank and Kotak which have actually given a negative return in the last month. So probably some valuation catch up happening as far as the corporate heavy banks are concerned. But disclaimers, of course, that this is the larger banks that we're talking about.
Thanks, Shraddha, for bringing all those details. And clearly, Neeraj, I think it is a valuation catch-up, which Shraddha was mentioning. On FY20 basis, the price to book is somewhere about 1.7. But I think what's also working in their favor, obviously, these clarification with regard to accounting norms. There were some other issues with, related to Chanda Kochhar. And since the time she's gone on leave, we've seen the stock at least recovering from those levels of 270 to now somewhere about 330.
Yeah, I think that gap, and Navneet, I don't know if it, to your notice, if you've seen that happening in trading patterns as well, whether you saw it in the build-up or otherwise in the last few days or weeks. But how has the trading pattern been in ICICI Bank before we come to the analysts?
Specifically today, I've seen the volumes for ICICI Bank. I think when we were doing the F&O show, in fact, in the first hour of trade, only the volumes were really on the higher side. And yes, we have seen some bit of fresh long positions coming in for stocks like ICICI, Axis, yes, which were beaten down. Even if they were not fresh positions, but there were some short positions which were there in the system that started, getting to get covered up. So that was a positive sign in terms of the trading pattern which we've seen.
Very interesting. Let's bring that trade pattern, since Navneet was talking about that, and the GD function on the Bloomberg terminal and the volumes out here. Talking about how the trade volumes have picked up. Let's bring this up and blow it up on the screen. This white line is today's volumes, and this is how the trajectory looks like based on what's happened right now. This blue line is the 20-day average volumes, and as you can see, there's a wide gap between the cash market volumes that have happened on a single exchange in today's session versus what the average volumes were for ICICI or have been for ICICI Bank. Now get to the ANR function and try and show you what the analysts on the street are working out. Almost everybody's bullish out there. The return potential of about 10.3%, but remember, this is the sell side, which is only looking at what's happened in the quarter gone by. Can't really predict what will happen 2 years out in their notes per se. That you will get in from the fund manager or the portfolio manager. But even by the conservative estimates, 45 buy calls, 4 hold calls, just 1 sell call, return potential of 3%, and this is after the move that we've seen over the last few days. Imagine the move that has started from almost 265 or 70 onwards, all the way to about 333 currently, the intraday high of about 341. So good going really for ICICI Bank in the session today. Well, should we get our experts then, Navneet?
Yes, why not? We'll get our technical experts on board. I think we've got Abhijit Phatak, who's there with us, Director at DefineEdge Solutions. Hi, Abhijit. Good afternoon, and thanks a lot for joining us today on this countdown show of BloombergQuint. First, a word on the indices, which have been trading, or rather touching fresh highs almost every day. Is the derivatives data, especially the PCR, indicating that the markets are overbought? If yes, what are you doing at current situation?
Yes, you're right. 11,500 to 520 is a very big resistance zone on Nifty and Nifty futures as well. So one should be extremely cautious with longs, either hedge it or book longs completely. This is not, I don't think this area will be crossed within a day or two. It might take some time. Maybe a retest of 11,400 in the coming days is possible.
Okay, and in terms of individual strategies on stocks, so what are you recommending?
Yeah, I'm giving both short strategies. One is HUL, which has not been able to cross 1765, 1770 over the last almost 2 weeks. So one can short it near 1760 with a stop loss above 1770, and maybe in the next week it can go towards 1740 or maybe even 1720. Another short is Century Textiles, which is not crossing 920, 925. So with that as a stop loss, shorting it near 915 for a first target between 900, 905. And if it goes below 900, then it can be a deep cut, maybe even to 860.
Abhijit, interesting. 2 short calls. You're not going for longs on either the banking index per se or any of the specific banks?
No, nothing. In fact, I heard you talking about ICICI Bank and the heavy volumes. Based on my experience, these kind of heavy volumes typically come at the top. I mean, I'm talking about a short-term top. So there's no way of going. One bank which is looking good is Bank of Baroda. It has given a good breakout, but again on dips, not at these levels of 157, only on dips. And ICICI Bank definitely no longs at this stage.
You would initiate a short here? I mean, or you would wait for maybe slightly higher levels or some conclusive trend?
Yes, the problem is the high is quite far off. In fact, it has come down quite a bit from the high. High is almost 345 and now it is 332. So if someone can digest a stop loss of almost 14 rupees on ICICI Bank, yes, he can go short. But typically on rise, yes, with a stop loss above today's high.
Okay. Well, that's the view on ICICI Bank. Can't quite take a chart check on Bandhan Bank. The data is not for that far off, just about 5 odd months. But what a roll, what a move this one has had. 735 currently for Bandhan Bank, up 6% in trade. So really good going. The stock is trading at new highs. Ceylan Exploration at new highs. VIP at new highs. 5% higher for VIP at 602. And Graphite India too moves up in trade. I think oil exploration by and large, Ceylan and HOEC, both of them are doing very well. And RT Industries continues from where it left off. All of these stocks are trading at fresh highs for themselves. Let's get in Sharmila Joshi with her thoughts on the markets as well. Sharmila, good having you. Thanks so much for joining in. It's a buffet out there. Take your pick. Bandhan Bank, VIP, Graphite India, RT Industries, a clutch of names hitting new highs on very good volumes and sustained gains, Sharmila. It's not just happening over a single session.
Oh yes, absolutely, and I think that is probably the most heartening thing, that we are seeing this buying coming back into mid-cap stroke momentum stocks. And as you're saying, it's on the back of good volumes, and certainly I think some of them deserve this buying. For instance, I think from the names you mentioned, Bandhan Bank did have a very good set of numbers. So, of late we've seen a lot of buying coming into both RBL as well as Bandhan Bank, and they are in that sense the new kids on the block, and the numbers have been good. So I think that the buying in that sense is warranted. VIP actually has been a surprise because they said that this is the stock that has beaten the ASM jinx sort of. It's gotten into ASM, but the stock has continued to rally. Numbers have been good there, so perhaps I think it's in terms of valuations a little stretched, but people are liking the stock, so no arguing with that. So yes, I think completely this has been a very heartening feature of the rally that we've seen in this last week.
Okay, VIP locked in upper circuit. Remember this stock after entering the ASM, it is still been hitting new highs almost every day. 602 is the level where it's sitting currently. Sharmila, just talking about a couple of more earnings which came by from the broader markets, one of them being Venky's. The stock is up. They posted a good growth on the bottom line of almost 37%. The profits were at 71. Marginal dip, however, for the margins was seen. The stock's up 6%. The other one, TTK Healthcare, that's gone up quite sharply in today's session. In fact, they've turned profitable for the June quarter. EBITDA has come in at 15 versus an EBITDA loss which was seen in the corresponding year, and obviously they posted a profit of nearly 8 crore. Anything that you've made of the earnings? You can include the others as well. Nalco posted good set of numbers as well, and something like Page Industries which is hitting fresh highs.
Yes, absolutely. I think all the names that you mentioned. I think Venky's was also hit by the ASM. We did see the stock correct when it got into ASM, but I think the fact remains that this is a very niche kind of a mid cap and the kind of product that they're in, one doesn't really expect the stock to be so volatile. But I think that was really because of this, the fact that it entered into ASM, but numbers are good. So I think, definitely, the kind of recovery was warranted. TTK Healthcare, again, I think, there has been some kind of corporate development in that stock, and we have been hearing of them being able to get more from the subsidiaries and, the product launches, etc. So I think, that could be another interesting stock. But I think really, as you said and you mentioned, I think the really good performance for me was from Page Industries. We've really seen the stock enjoy premium valuations, and I think that if you look at the numbers, you know why the stock is enjoying those kind of valuations. So I think a really good set of numbers from Page Industries once again.
Well, look at those stocks doing so well for themselves in the session today. Really good going. Abhijit, can I actually ask you about Page Industries? Yes, it's an expensive stock. It may not be as liquid as some of the others usually are, but 50,000 shares traded is not mean feat. It just continues to rise almost every single time. It's had a period of slumber. I don't know if you can take a trade here or no, but even if you can't, what do the charts suggest? What levels can a stock like Page go to?
I mean, this chart is so bullish that it's very hazardous to guess a target. So it's better to just trail the positions. Right now it is 31, almost 32,000. So again, the stop loss will be a bit far off because even on a weekly chart, it has given a very big move of almost 5%. So a stop loss below 30,000 is something which is sort of a conservative stop loss, and one can use that and just trail it.
Okay, that's the technical view coming in. The other stocks which have gone up in trade is Sharda Cropchem Limited. That's up almost 14%, and just in the last 5 to 10 minutes of trade, you've also got something like PC Jewelers. That's also gone up. Just to remind and alert our viewers, I think PC Jewelers will be coming out with its quarterly earnings tomorrow, so ahead of that, 8.5% higher for this stock. Let's bring in Sarvendra Srivastav, who joins us on the show right now. Hi Sarvendra, good afternoon. First view on the indices, Nifty, Bank Nifty. Are you taking any fresh positions at current levels?
Yeah, very good afternoon. Yes, absolutely. I think on numbers, we are clearly now out of the woods, I can call that. So purely on numbers, the breakout is there, and that is what we were discussing last when we were on the show as well. So even though internals are not adding up, but since the numbers are moving, so you have to move with the numbers, and that is where we believed last time as well that 11,500 was doable, and this could also stretch all the way till 11,700 or 11,900 as well. So I would maintain that there is a stretch possible all the way till 11,700, 11,900 on the Nifty. So anybody wanting to trade fresh should be doing it on the long side only, and we would advise now a stop loss below 11,380 on spot. So if you're wanting to take a trade towards that area, you would want to keep a stop loss there. So 11,879 on a daily closing basis will be a stop loss for Nifty going forward. I would put the first target at 11,700 on spot. So, and then that can stretch to 11,900. Coming to the Bank Nifty, again there as well, we believe that 28,300 was possible. So that has come. So it has come slightly earlier than the Nifty target. So I would say that now for the Bank Nifty, 28,500 to 28,600 is doable, since the Nifty also has to do those 200 extra points. So anybody wanting to trade the Bank Nifty also, I think now you will have to keep a stop loss below 28,200 and look at a target of 28,500 for the Bank Nifty on spot. And both the indices I would recommend trading long from here on.
Two stock ideas for the afternoon, Sarvendra?
One idea that we had, and that's already moved up, so I'll skip that. One mid-cap small stock, I would say a stock is Jindal JSL. It's quoting at around 64 right now, and as a disclaimer, we have interest in that stock. We have clients have positions. We have positions there. But I think this is a purely delivery call. 6 to 12 months, you should be looking at a target of close to 90 to 95 on JSL. So that would give you around of 40-50% uptick from here. If you are doing that trade, you are keeping a stop loss at 54, below 54. So 53.90 is where you'll want to keep a closing only stop loss for JSL. And one long call that we want to reiterate again on a positional basis is Tata Motors, where we believe these are the lowest levels for Tata Motors over the last 6-7 years now. So 250, 240 thereabouts has always been a good support area for Tata Motors going back all the way from 2011-12 onwards. So I would say that I would assume that this number will hold, and as long as the stock is now not going below 238, this stock looks good. So I would say that for the next 9 months, 6 to 9 months, I would believe that it has got the potential to scale back towards 320, 330. Anybody wanting to take that trade will have to keep a stop loss below 238. So stop loss below 238 on a closing basis, and a buy on Tata Motors for a target of 320 next 6 to 9 months.
Okay, that's a technical call, but a positional technical call coming in from Sarvendra on Tata Motors. The stock has been underperforming, but remember, majority of the analysts on the street are still bullish on this one. Sharmila, let's talk about your fundamental picks for the day. Anything that you will be advising our viewers?
Well, there's one stock, I might have spoken about it earlier, which is BEL. The point being that we've seen the stock really correct, and I think the bad thing is that, numbers have not been that great, and the fact that since this is a PSU, the follow-on IPO or the fresh sale of shares from the government is going to be at a lower price. So, those kind of things have hit this stock. But the fact remains that, the kind of business that this company, the kind of orders that it will get, those kind of orders will only come to BL. And I think we saw that borne out yesterday when they got a 9,200 crore worth order. Why this order is important is that this is almost like the order size is so huge that it's almost 25% of their entire order book. And I think it also, as I'm saying, it reiterates the fact that they have that monopoly when it comes to those sort of orders. So this is a stock that I like at current price. I think it can pull back to 150, 160 levels. BEL. I think the other stock which has also again corrected in this whole mid-cap carnage that we've seen is India Cements. Here again, I think that we've had good reasons. We've not seen the best of numbers from from the entire cement lot, in fact, the whole of last year. But now we're beginning to see better numbers. The negatives are getting priced in. So I think once again here, as demand, there are indications that demand is picking up. So I think here, once again, at these valuations, India Cements is another stock that I like.
Yeah, well, Sharmila has actually been in favor of India Cements now for a while. And the valuation is certainly in the favor. Let's see how much does it give in terms of returns going ahead. ICICI Bank still sticking strong. The one stock that's done really well though the last 3 days has been Hindalco. Maybe the last 5 days, but the last 3 days for sure. This week, Hindalco has been on a roll, be it because of the Novelis numbers, Aleris news, or otherwise just
Aleris numbers were also better than what the street was estimating.
Yeah,
I think today's
up today.
Yeah, today's move is largely got to do with the numbers that we've seen from Nalco. It's only boosting the confidence with regard to the standalone performance now Hindalco can post. And I don't know, I was just reading one of the research notes of Edelweiss on Nalco, which suggested now after looking at the performance of Nalco, which is obviously aided by higher alumina prices, the Utkal plant of Hindalco could post better numbers this time around. So I don't know if it's got something to do with that, but clearly everything going well. Nalco numbers were good, which aids well for Hindalco. Aleris and Novelis, both of them posting good set of numbers, which a lot of analysts were saying the target, EBITDA target for FY20, which management had given, probably Aleris could surpass that as well.
Yeah, well, should be interesting. Maybe a bit far off, but you never know what could happen. For now, though, if you just look at this week's chart, Hindalco has been on a roll, and I think there are fundamental triggers, some of it its own doing, as in the doing of the companies that it owns, some of it the sectoral tailwinds that seem to be there. 6.5% over the last 5 days, to be honest. While it's a 7-day chart, the moves happened largely over 5 trading sessions. Fundamentally, Sharmila, would you be inclined to go out and invest into a company like Hindalco currently, or any metal name for that matter? I mean, Nalco numbers were fabulous too, or would you give it a skip?
Well, honestly, I like Hindalco a lot, and perhaps I've been sort of recommending this stock from a higher price. So in that sense, perhaps I got it wrong at that higher price. So there is no real reason for me to not like it at this price. And I think over and above everything that you said about Aleris and Novelis, etc., I think the fact remains, the big reason why I like the stock is also the fact that we are beginning to look at aluminium as a metal that will sort of gain prominence over the next couple of years. We've already seen it happening in the US, where a lot of buses, etc., are increasingly beginning to use aluminium. We are hearing of cars beginning to use aluminium. So aluminium is a lighter metal. A lot goes in favor of using aluminium in place of steel. So we are seeing increased usage of aluminium globally. So, I think that's a very big trigger for aluminium. I would say on a global level, but I think on an India level, we have a great stock in Hindalco, which has that exposure to Novelis, and now we are hearing, Alaris. So yes, I think definitely I would be very positive towards the Hindalco.
Okay, last 3 months the stock may not have done well, but as you can see, that's the monthly performance, and we've seen traction coming back into this stock because it's been inching higher since the mid of July. The other stock I want to pull up is DLF and also the Nifty Realty Index, which is doing pretty well. A lot of these real estate stocks are up and about. DLF, remember, comes out with the numbers tomorrow, so ahead of that there is some traction being seen. Remember, this is a company which has been focusing on deleveraging its balance sheet, and we've seen some efforts also coming by, at least in the last few quarters. Sharmila, any expectations from DLF, the sort of move that we're seeing today ahead of the numbers?
No, very honestly, when it comes to real estate, I find, like as you said, DLF is trying to deleverage a balance sheet, and you hear of on a whole host of names, you hear of different kinds of issues, some of them corporate governance issues. So I've pretty much steered clear of the pack, except some regional plays and a play like a Godrej Properties. The way I look at real estate is really to go via the proxy place. So I've always really recommended an LIC Housing Finance or a paint company or a Century Plyboard or a tile company like a Kajaria, rather than buying, a real estate name directly. So I've sort of chosen to the proxy route to approach this sector.
That theory may not be working. We did see Greenply's numbers coming out yesterday, and clearly the numbers were not good, and the stock also fell quite sharply.
Yes, I think that you could see those kind of things happening. But, by and large, the point I'm trying to make is that if you see that real recovery coming into real estate sales, then I think, it follows that anything that's used for home improvement or, that's where the spend will be. So if you're positive on real estate as a play, then there is a good reason to be positive on these stocks as well. So I've never really recommended Greenply, but I have recommended Century Ply, where again I think numbers have not been that great. Kajaria Ceramics also corrected and is now seeing a bit of a recovery. So yes, I think there have been they have been hit by GST and other sort of issues, but now I think they should begin to see recovery from this quarter onwards.
Okay. I just want to take the conversation back to banks, because the Nifty Bank is now up 0.95%, 266. It's really on a roll. Of course, when the Nifty Bank moves the way it is, it's not moved by the tiny tunes, the likes of Vijaya Bank and etc., but the larger ones. And ICICI Bank right up there, 334 and counting. Axis Bank about 3.5% higher. State Bank of India about 3% too. Abhijit Pathak, I want to draw this conversation back to where what we had at the start of the show. When you mentioned that a lot of times you've seen such patterns happen when the stock is nearing a top. I can understand that for ICICI Bank. What about State Bank of India? That one too has been active. That one too is up about 3% in trade. Is that looking topish, or do you believe there could be more upsides here?
State Bank is looking good. In fact, there is no sign of a top yet, but I would be cautious in State Bank because of I think there are results tomorrow. That is what I read somewhere. So that's why it might be a bit, anything can happen on results day. So I normally don't trade on results day.
Okay, which is fair. Don't trade it ahead of the results because anything could happen. If the corporate facing bank numbers are any indication though, you probably won't have too bad a number from a State Bank of India as well. But please don't take our word for it. It's just more guesstimates, but don't need any of the numbers that we've seen thus far. Even if the reported numbers would have been slightly soft, there has been a silver lining of sorts in almost all of the numbers, at least the corporate facing banks.
That's right, and the biggest question is whether the cleanup is now taking place or not. That's what everyone's been betting on. That's what ICICI Bank also said. So we need to wait and watch out for that. That didn't happen in the case of PNB, I believe, this time around. Slippages were on the higher side. But can we just pull up MRF? I think the numbers have come in. The profits are at 261 crore versus 106, which was reported in the corresponding quarter. The stock's seen a bit of spike post the numbers. The revenues for the quarter, however, are up almost 8% in trade, Neeraj.
Well, that seems to be the net profit number, at least seems to be fairly robust, though the revenue is not. So must be some one-offs out here or a lower base last time around or something that has led to this, though EBITDA 2 is about 2.3 times. Well, that's astounding. very strong numbers there on the EBITDA front. I was actually a bit surprised when I saw the difference between the top line and the bottom line.
It higher number at the operating level is what is trickling down to bottom line as well now. At least that justifies the sort of performance that we're seeing at EBITDA level 2.3 times.
Very robust numbers that have come in from MRF as well. However, we'll discuss this in a bit. Bharat Forge, they reported a steady quarter too. Yatin Mota caught up with the management, Baba Kalyani. Let's hear out. He started off by asking whether global sales will be as strong as the domestic ones. Listen in.
You know, we have a fairly large basket of export market. It is commercial vehicles, it is industrial products, it is passenger cars. So we are seeing a very, very strong demand pull in all these areas and across the world, across North America, across Europe, across Asia. So we are very bullish on the export market going forward. I think we should see increases in our export revenues as the quarters pass.
Okay. And Mr. Kalyani, you know, in the release, you have specifically mentioned that there have been strong order wins in the domestic market as well as, you know, for, your German operations wherein you have secured a multi-year 40 million euros, order. So do you think the pipeline is healthy? You know, if you look at the Class 8 truck orders also, the data points are quite encouraging. So do you expect, the order flows to continue at similar rate points? And also, if you could tell us how really is the European market with respect to the commercial vehicle business, because, things have been slightly weak there in the auto sector. But for Bharat Forge in particular, how have been the things shaping up in Germany?
Bharat Forge things are pretty strong. We are switching to a large extent our product mix to more lightweight components in aluminum. So we are seeing a very strong traction in those products. And that is what we just announced, a 40 million euro order annualized, in Germany from JLR. The truck market in Europe is holding pretty reasonable. It's at a pretty good level.
Okay.
So overall, the markets are pretty good.
Okay. Okay. And Mr. Kalyani, also if you could tell us about your expansion plans, how much will you be spending, especially for the US facility which is coming up? And also if you could update us on your Nellore and Baramati expansion projects, by when do you expect, the products to get rolled out from these domestic plants?
Baramati expansion is largely in our traditional products because we are running out of capacity and we just need to put more capacity. So we are putting in capacity. This is largely capacity increase in both large forging as well as machining, and this will be on stream by March of 2019. So by April, the first quarter of next year, we should see this capacity coming on stream. The same thing is with our plant in Nellore. This will be on stream by April, May of 2019. We'll start producing. But since that's a greenfield plant, there will be a certain ramp-up period of about, let's say, 4 to 5 months. Whereas in Baramati, we expect to see a much smaller ramp-up period because it's a brownfield expansion. But it's a pretty large expansion that we are doing in terms of capacity. That should increase our capacities quite substantially.
Okay. Sir, one question on the operating margin front. You have been able to deliver stronger margins, on a year-on-year basis, despite the fact that we had commodity cost pressures. Last time when I spoke with, Amit, he said that, you have been looking to cut costs and use the capacities at the optimum level. So given the fact that, commodity prices have now stabilized, and you're talking about good growth. So do you think from here on there is scope for further improvement as your new plants come into picture and the overall operating leverage improves because of higher volumes?
We are already running at, we have given a guidance somewhere like 28 to 30%.
Okay, so you will be maintaining that?
Operate in that range.
Okay.
This quarter came in at 29%, was better than the last quarter.
Okay.
But it also depends largely on product mix. Sometimes you have one type of product mix, sometimes you have another. The good news is in the defense aerospace business, we are beginning to see a lot of traction. Okay. And you will see this in the next quarter. Our revenues in this sector will be substantially higher than what they have been before.
Okay. And sir, one final question on the newer technologies and the newer, acquisitions that you have done. You are looking, to get aggressively into the electric vehicle space, and you have been looking to invest in newer technologies. You have done recent acquisitions and investments, in some overseas businesses. So, do you think Bharat Forge will continue to invest in these special units, will incubate them? And when it comes to the inorganic market, with respect to newer technologies, especially in the electric vehicle, Bharat Forge would be, open to inorganic plans in this segment particularly?
Yeah, I don't think we will make vehicles as such, but we will certainly make
yeah.
large number of systems and subsystems that go into these vehicles. So these acquisitions are largely to create that kind of capability.
Okay.
How do you create the powertrain, the subsystems, the electronics, etc. that go into this? And I think that will help us create a space for ourselves in the EV market as the EV market evolves in India.
Okay, that's some commentary coming in from the management of Bharat Forge. The stock's not reacted too much. Let's quickly take a view from Sharmila before we thank her on the earnings of Bharat Forge and also MRF. Sharmila, we were thinking the numbers are good, but I guess they are below what the street was estimating. At least the Bloomberg terminal shows that even at the operating level and bottom line, MRF's numbers have been below estimates.
Yeah, the number sounded like something the market was expecting, but I think perhaps last year, for some reason, the number must have been lower, so which is why the profit seems really like a good number. But I think a decent set of numbers. They have some concerns, all these tire makers, and I think they have made a presentation with regarding to tires coming in from China, etc., especially in this new scenario. So that is something that we need to watch out for. But the demand which is there stays quite good. I think coming to Bharat Forge, again, I think a decent set of numbers, and they seem to be recovering quite nicely from some of the old issues that we had about a year and a half on all those class 4 trucks, etc. But I think the problem that happens with companies like Bharat Forge is that now there are so many different pieces that you need to consider. When you say whether they'll do well going forward or not, that it just becomes a little more difficult to evaluate. But at the same time, I don't think that you can ever be very negative on the stock, because at the same you don't know which is there could be some piece that does tremendously well for them, because that's how they sort of diversified themselves. So I think a good company, and perhaps if you were to see a little bit more of a correction in Bharat Forge, it would look attractive to buy.
Okay, Sharmila, thanks a lot for joining us today and taking us through your views on these stocks. But markets are still going steady. Bank Nifty is above the mark of 28,300. Nifty 2 sitting very comfortably around the mark of 11,475. Let's see if in the last half an hour of trade, can we touch the 11,500 mark or not. But it's time for us to slip into a short break here and countdown. On the other side, we get you the Fab 4 stocks of the day at 3:15 p.m. We tell you what the dealing rooms are recommending in trade and some closing strategies from our technical experts. Stay tuned.
How do you go from being a level 3 CFA who works in private equity and knows what words like financial modeling mean to someone who's made their mark on the world by understanding the ins and outs of women's makeup? Hi, I'm Manish Taneja and my journey is a colorful one. I've been on both sides of the pond. I started out in corporate India with a sound job and a solid salary. I was perfect marriage material. And then I found my calling, makeup. Today, my company Purple makes 15 crores a month in sales and is profitable. Let me tell you my story.
Aegon's of business never stop. Starts from 10th August, only on BloombergQuint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Back with Countdown right here on BloombergQuint. 29 minutes left for the markets to shut shop. Just get the European picture up on the screen and just show you what's working and what's not. It's a tick of red across the screen in the European markets. The Dow futures, after having days of green, the futures indicate that it will be a flattish start. Let's wait and watch what happens there. Two or three stocks that I want to highlight because the volume picture out on all of those are very, very interesting. So be it Hathway Cable, be it Indian Overseas Bank, or be it an Atul Limited, mid-size, small-size names. But look at the volume picture out here. Indian Overseas Bank surges on very strong volumes. The white line is the today's volumes, much higher than the 20-day average. I'm guessing it would be a similar scenario for an Atul Limited or a Hathway Cable. This is Atul Limited, and big moves there on the volume front. And I would guess even Hathway, some big moves there on the volume front. The white line just suddenly showing this bump up in volumes today compared to the 20-day average. So some strong moves there in a clutch of these names. Do any of these stocks find their way to Yash Upadhyay's list of the Fab 4 stocks, or are they completely different? Let's ask Yash that. Yash, good afternoon.
Good afternoon, Neeraj. I've tried keeping it as different as possible. So first up, we have Page Industries. Now this one's hit a fresh all-time high today after reporting a good set of numbers. The revenues have jumped 18% to 815 crore rupees. Their net profit jumped by 46%, while margins have expanded by about 350 basis points. So all in all, a good set of numbers. The stock's up about 6%. Well, Ramco Systems had 1 point surged as much as 8% today after the company said that it has won a big multi-million dollar order, multi-million dollar software deal from one of Philippines' biggest freight company called AP Cargo. Well, this one's a close call between Suntec Realty and Seal and Exploration. We've talked about Seal and Exploration, but Suntec Realty, that's another name which is attracting a buying interest. So DSP BlackRock mutual fund, they bought 9.5 lakh shares in this one, so that's up about 4%. And lastly, I want to highlight Aarti Industries. Now this one's gained close to 200 rupees in the last 7 to 8 trading sessions. In fact, it hit an all-time high today of 1,444, up almost 18% in the last 7 days. So that's a good move coming in for Aarti Industries. Back to you.
Oh, thanks for that. 32,000 for a Page Industries. For all the brickbats about how expensive the stock is, it continues to rise and shine. Really good going for this name, and Aarti Industries too. Actually, Atul Limited, Aarti Industries, the clutch of these specialty chemical companies have done really well for themselves. Do we have Mayuresh Joshi with us? Okay, we'll have him in moments from now. Sarvendra Srivastava, these specialty chemical or chemical companies, I don't know which of these you track on the charts, but an Aarti Industries, an Atul Limited, although it's probably not as liquid as the others are, and then Vinati Organics. Some very strong moves in these names in the last few days. Any of these you track on the charts?
Not in regular coverage, Neeraj, but yes, I can look at, while looking at all the three, I think the best kind of volume price structure is right now visible on Vinati Organics, where we are trading over the last 3-4 sessions on good delivery as well as trading volume. So I would say that within these three names, this looks to be the best. It has broken out of the September 17 highs, which the mid-cap index and quite a few mid-caps now wanting to take out those numbers. So this is among the few first starters. So out of that block at 1125, now currently quoting at 1198. So I would say that with the kind of price volume action, I would see at least, if not more, 120 to 130 more points being added here. So that would give us a target of around 1230 odd. So I would say if someone wants to trade this, 1230 should be the target going forward. And if you're taking that trade, you would have to keep a stop loss below 1144.
Okay, Vinity, organics down almost 1%. Remember, the numbers were pretty good. We also spoke to the management this week itself, and the guidance which we got was quite encouraging. In fact, their numbers were good because one of them competitors have shut one of the verticals of the business which they operate in. But talking about some stocks, can we just pull up the intraday chart of Dena Bank? That suddenly shot up very sharply in trade. I think it's sitting with gains of nearly 13% right now. And not only that, stocks which were falling from the likes of PFC, REC, all these stocks have bounced back quite sharply today. So PFC now almost at day's high, 6.5% higher, and REC too sitting with gains of nearly 4.5% as we speak. Well, on that note, let's bring in our fundamental guest on the show, Mayuresh Joshi, fund manager at Angel Broking, joins us on the show right now. Hi, Mayuresh. Good afternoon. Clutch of earnings, from the broader markets came in today, today as well during market hours, and yesterday post market hours. Anything which caught your attention?
I think it has been a good, reasonable quarter for a lot of mid-cap companies. And to a large extent, a lot of companies have reported reasonable set of numbers. Having said that, again, a few of the companies within the auto ancillary universe, something like Aminda Industries has posted a very good set of numbers in my opinion. Top line growth, you're seeing margin expansion, and the management commentary remaining very, very strong and robust. What you probably saw within the broader universe with NALCO presenting a very good set of numbers, both in terms of the alumina production holding up, alumina prices actually even on the spot markets right now, apart from the reported numbers in the quarter gone by, holding very, very strongly, and even the aluminium prices are holding strongly. So I think NALCO, in my opinion, also presented a very good set of numbers. So I think these select few, I think, have presented a good set of numbers in my opinion.
Interesting. Okay. Well, and I think there is little doubt really that these stocks did what they did on the quarter and thereby are getting rewarded. But let's just stay on. I just need to take one final question from Sarvendra Srivastava before I thank him. Sarvendra, we talk extensively about banks. I don't know if we referred to Axis Bank already or no, but if we haven't, in addition to ICICI Bank, Axis too is packing a serious punch, 618, quarter to 4%, 3.78% higher in trade. If you were long, would you go home taking the long positions with you?
Yes, absolutely. If you give me that assumption that if you were long and you want to take the position, yes, you will want to take the position home, and you would want to, from a trader's angle, you'd want to keep a trailing stop loss, and you would say that you will trail a stop loss below 600 and hold the position and look for the stock going towards 630, 640. The only concern here is that the best part of the move probably could be over. So from 500, 480 odd till 600, we've kind of come in a pretty good time for a stock of that stature and that size. And we need to keep in mind one thing, that from 2015 onwards, 650, 640, that range has been the undoing for this stock for the last 3-8 years. So now it has to decisively break past 655 and close above that for, say, a couple of sessions or at least a week, where you can say that, yes, a larger term uptrend could now resume. Else, the stock could fall back into this trading range that we have been doing for the last 3 odd years, which is between 650 to 500. That's what the stock has done for the last 3 years. So I'm saying the momentum right now is positive, so carry on. If someone wants, you can carry on the trade depending on where you have gone long. But I think 630, 620, that area should be an area where you should be taking some profits. And revisiting the stock once we close past 655 for a week or so. And then probably we can say that this is a stock which could add 30, 40, 50% going forward next 9 to 12 months. So I would say we are right now at the upper end of the trading range, but yes, the momentum is positive. So next 2-3 days, you can hold the position.
Okay, you can hold on to your position. Axis Bank is now at sitting with gains of nearly 4%. Shailendra, thanks a lot for joining us and taking us through your technical views on these stocks that we just discussed. But the other one which I want to discuss is Cummins. If you could just pull up the futures as well of that one. Remember, the numbers had come out today and we've seen a lot of build-up coming in on the future side of Cummins. The stock is down 4%. The top line, bottom line, both were down. Revenues were down 1%. The profits fell almost 18%, coming in at 183. And look at the build-up. Open interest is up nearly 53%. That's telling you that there are short positions being taken on Cummins India in today's session. Mayuresh, I don't know if you tracked the stock. If yes, what did you make of the numbers?
I think generally, if you see, Navneet, I think numbers for Cummins, which in my opinion were very, very soft, and the natural reaction that you're probably seeing in terms of the stock price. I think a lot of the management guidances are pointing out to a very slow and gradual recovery, both in terms of order wins coming their way. And even if the order wins do come in, I think at what margins they are coming and the execution patterns thereof. So, I mean, if you look at even the management transcript of Thermax, for example, I think the kind of order flows that have come through for Thermax this time round and the kind of numbers that they have reported, I think the softness might very well continue for these companies. So my opinion is that they might just consolidate at lower levels unless we see the first signs of orders picking up meaningfully and substantially. And as execution improves, which will reflect on their margins after a lag, I think the earnings upgrades will start coming through. So I think consolidation at lower levels for a clutch of these stocks.
Okay, that's Thermax. That's also down, actually. That's sitting at days low with cuts of 3%. Mayuresh, before I get to your top fundamental picks for the day going ahead, I just want to address one of our viewer query. On YouTube, somebody wants a view on Make Money Organics post the first quarter result, and our viewer has been holding the stock since 63, and currently it is at about 94. What would you advise him to do? Is it time to book profits, and what did you make of the first quarter numbers?
So is that for me, Navneet?
Yes, Mayuresh.
Yeah, unfortunately, I don't track that. So sorry for that.
Okay, no problem. I'll just take this quickly to Abhijit. Abhijit, on the charts, what would you suggest? Make Money Organics?
It is a bullish chart, but then I would wait for a close above 100 to be very bullish on it. So right now it's a bit near the resistance. So maybe he can book partial profits and then add maybe if it crosses above 100 and closes above 100.
Okay. So that's the view on Make Money Organics. I hope the viewer got his or her respective view. Before we move any further and get in a sense of what dealing rooms are recommending in the session today, a quick check on what stocks could enter or get out of the F&O ban. Navneet, how is the list looking like? If not conclusive, what stocks look active?
No stock as of now. It's coming on my radar, Neeraj, which can enter, but definitely watch out for something like Adani Power, which is up in trade. It is very close to coming out of the F&O ban. Remember that limit is 80%. Yesterday's open interest was 85. So one is that, and second, we just discussed with Mayuresh, Cummins, Neeraj, post the earnings, that's seen a lot of open interest build-up of 50-55%. So a lot of fresh short build-up has been seen in that counter.
Well, interesting. That's the word really on stocks that could enter or get out of the ban. Not necessarily an informed list, but just the trading patterns on some of these look to be very, very interesting. Time now to get in a sense of what dealing rooms are recommending in the session today. Darshan Mehta and Yatin Mota are here with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Neeraj, a couple of stocks, and starting with MRF, that is one stock which is under pressure. Dealers do indicate that domestic funds are seller after a weak set of first quarter numbers. So MRF, that is one stock wherein dealers expect some bit of downside after the earnings have missed street expectations. Axis Bank, and in general, we have seen private sector banks do well in trade today, especially ICICI Bank and Axis Bank. Dealers on the basis of F&O trends are indicating a buy today, sell tomorrow kind of a strategy here. And the cash segment, do watch out for Cocoa Camlin. After quite some time, they have been able to give strong quarterly earnings. Their new capacities have kicked in, and probably because of which we could see some good revenues come in. So this is one stock on the HNI radar, almost 15% up for that one. But Darshan has a few more stocks to talk about.
Yeah, so
Yeah, then one of the stocks that's been spoken about is Maruti. It's come off from the levels of almost 9,500, 9,600 that it recently touched. Some of the HNIs are accumulating is what some of the dealers have indicated. So watch out for Maruti Suzuki. The other stock that's been actively spoken about, and that is the real estate space. Today, ahead of the numbers, tomorrow DLF will come out with numbers. DLF is up 6% in trade. Indiabulls real estate is up another 3%. So traction seems to be coming back into the real estate pack, which was missing over the past few weeks. And finally, JSPL will report its numbers today after market hours. Dealers anticipate a strong set of numbers to be coming in from JSPL, and they're watching out for that number. So that's one of the counters. It was up almost 3 to 4% in morning, but as the market has cooled off, most of the counters have cooled off in the metal space.
We'll watch out for all of those names. Sorry, Tony. Thanks a lot for that. So the 3 or 4 names to watch out for. Actually, from a trade perspective, I don't know if you can trade MRF that effectively, but a JSPL maybe. Abhijit Pathak, thoughts on either of these 2 names?
Sorry, which one? MRF?
And JSPL.
I don't track GSPL, but MRF is definitely looking weak, but it has support near. Actually, it is looking weak, and definitely no longs in this stock.
Okay, that's MRF for you. Some flashes there on your screen with regard to Jet Airways, coming from Jet Airways chairman, stating that embarrassed that the company has not performed. Remember, the numbers will be coming out today. We've not seen the how the performance has been in the first quarter, but going by what Indigo posted, it looks like, and also Jet has been in news for pay cuts for its employees, though the news has been denied by the management. But let's see, the stock is an F&O ban for the day, so watch out for that one. I just want to pull up TTK Healthcare. We just marked the numbers of this one a while back. The company turned profitable for the quarter. It's now locked in upper circuit with gains of 20%. And Neeraj, there is no stopping for Page Industries. It did cross some crucial levels today. It's been of 32,000, but now it's almost sitting at days high at 32,450 levels. Mayuresh, what should one do with something like Page Industries, valuation sky high, but the performance, the first, if you were to look at the first quarter numbers, they've been pretty good.
Oh yes, Navneet, and they have been delivering. And again, I think the con call will probably give or indulge more details. But looking at what they had stated last quarter round, they were expecting the outsourcing part of their business to increase significantly from the current levels. The exclusive business stores are also expected to expand quite meaningfully. And that probably gives them the edge in terms of expanding their franchise significantly in tier 3, tier 4 towns. The second aspect in terms of core numbers itself, the core numbers and the delivery in terms of top line growth, the margin expansion that you've seen in the quarter, the bottom line growth, I think it's stupendous and stellar at the base at which this company keeps on performing. Yes, there might be some issues in terms of input costs, specifically cotton prices, but they are prudently passing it on because of the strong demand for the brands that they operate out of. So large element in terms of very strong growth, with a very healthy balance sheet, with return ratios being extremely robust. I think the premium valuations probably justify the kind of prices that Page Industry commands. So anybody holding on, clearly hold on to this stock.
Well, anybody holding on to Page, hold on to it. For somebody who is feeling missing out, having missed out on Page Industries, Mayuresh, would you go out and buy it afresh?
So that's the most difficult and the most trickiest question to answer. So the valuations keep on becoming more dearer with every passing result, every quarter that they keep on posting that. So again, in terms of price earnings multiples, I think the stock is fairly valued. So I think the prudent strategy again is, if a correction does come and if a fall does come through, a staggered way of entering stocks like Page Industries is probably warranted.
Okay, 7.5% higher for Page Industries, 32,500 crossed at least for the day. Abhijit, if I could come to you, stocks like NMDC as well as your top loser and Nifty today, Bharti Airtel, have fallen quite sharply. What are the charts indicating for both of them? Would you look to take any fresh short positions, or let's say if somebody had already created shorts, is it time to book profits?
Bharati, actually it's still looking weak, and definitely one can go short with a stop loss above maybe 375, which is a bit wide, but it is looking weak, no doubt about it. And NMDC I don't track, sorry.
Okay, Abhijit, one more viewer query. If you could just pull up Axis Bank. Somebody's bought 620 call strike after paying a premium of 19 rupees. A viewer wants to know what to do with this one, and now the current price, at least the underlying, is at 622. We'll just pull up the option plate. 620 call is the strike we're talking about. Abhijit, what would you suggest to hold
I would
on
suggest
to
he should. No, I would suggest he should book, because from here on there is a, I mean, if you look at the risk, there is more risk of it going down, and his call option can go down, whereas there is a big resistance near 625, 630 on Axis Bank. So I would suggest to book it right now.
Okay, book profits if you're making any. That's the advice coming in from Abhijit. 10 minutes to go for markets to close. So let's get you some closing strategy from Abhijit. Abhijit, any BTST or STBT for tomorrow's trade?
No, same. In fact, I gave Nifty short almost near 10,500. It has already come down to 487. And HUL also was something like 1760. Now it is 1753. And I stick to those Century Textile short, Hindustan Lever short, and hedge Nifty longs or book Nifty longs.
Hedge Nifty longs or book Nifty long positions if you have any. And that's a short call coming in on HUL. Nifty sitting with gains of 20 points. All right, that's a technical call, but some fundamental picks now from Mayuresh. Mayuresh, you've chosen the stock that we've been discussing since morning, ICICI Bank.
Oh yes, I think this is something that I've liked over a period of time. And a large element in terms of the reported numbers, Navneet. I think the reported numbers had an element in terms of recognition of asset quality pressures that the bank is expected to witness. So to a large bit, I think the cleansing up of their balance sheets is very much at the fag end, and what you probably will see going forward with retail advances growing at a very fast clip, as you've seen for a lot of these corporate facing banks as they're de-risking their product portfolio. And again, the fee income portion also increases substantially. That stabilizes the NIM component. As that happens, I think the return ratios which have been subdued for a length of time, and again, the lending which probably happens to better rated corporates does lift ROAs and ROEs, which have been languishing, as I said, quite substantially over the next few years. The overhang in terms of what might happen in terms of investigations and the costs involved with the whole processes, I think the bank might very well gestate that in terms of what can come through in terms of additional expenses that it needs to incur. So a large element in terms of price to book or a price to adjusted book still remains very, very attractive. So yes, I think remain extremely optimistic on ICICI Bank.
Okay, that's from the banking pack, Mayuresh, but anything else?
So within the broader universe, Everest Industries on declines is something that I believe can really do well over the next few quarters. Within its different sub-segments, what you've probably seen in terms of their asbestos sheets, they are getting value-added products like the fungal protective asbestos sheets. So that itself is going to be very, very accretive in terms of what the Pradhan Mantri Awas Yojana and the 23,000 crores earmarked and the substantial flows that can come through. For the boards and panels, I think it's a substantially large market, 40,000 crores. Everest has a 25% market share. And again, they're getting innovative product here. So concealed wirings in wires and boards that they manufacture, I think is going to be extremely lucrative as a product. In their pre-engineering building segment, you probably got a lot of applications probably happening over the next few quarters as more and more infrastructure development starts taking place. I think you're going to see more of these pre-built structures actually gaining traction over the next few quarters. And again, I think the overall balance sheet dynamics should be very, very supportive in terms of a 15% top line, bottom line growth. The UAE foray was a little bit of a disaster a few quarters back. But I think that is well behind them, and they're very, very cautious in terms of getting into more projects like this. And cost optimization is also expected to work in their favor. So Everest Industries, in my opinion, I think it's a cyclical trend, it's a cyclical stock, but in my opinion, it should do very, very well.
Look at Hathway and Den, some big moves there. 11 rupees. Hathway had gone down all the way to 15. There's a bounce and a good one at that. Mayuresh, is this a bounce that you see in a lot of businesses wherein the stocks get decimated slightly ahead of time, then there is a bounce after which the eventual sell-off would resume? Or do you believe a lot of pain in the price because the business model is not going to die out completely?
So I think there are a lot of ifs and buts, right, Neeraj? I think if you're talking about the business environment as in general, there are a lot of uncertainties hovering at this point of time. What Jio might do, specifically in terms of the stock that you're talking about, I think, and the kind of repercussions that might have, is obviously going to be a driver in terms of either earnings upgrades or downgrades. The second element in terms of the entire mood point for the sector as a whole in terms of subscriptions actually going up, I think that is a given point. But what you're probably talking about in terms of the pricing and the pricing patterns and what probably happens with ARPUs and the entire model in terms of the capex and opex requirements, I think it is prone to a lot of uncertainties on the macro front. So I think, yes, I would tend to agree with you on that front, that the model is not entirely foolproof in terms of generating cash flows on a very consistent basis.
Mayuresh, I don't know if you track Ipca Laboratories. The stock touched 52-week high, and I guess the numbers came in today. Post that, we've seen a sharp decline in that counter. Currently is sitting at days low with cuts of 6 to 6.5%. I don't know if you got a chance to look at the numbers, but any thoughts here?
So numbers prima facie on the face of it, Navni, I think look pretty reasonable. But again, I think what the management commentary is going to be extremely critical. For Ipca, again, I think 3 plants affected by FDA. They've got a huge amount of compliance costs which have already incurred in terms of recognition on their balance sheet. So any push through that probably happens in terms of approvals for all these 3 plants is obviously going to be incrementally positive. In terms of the domestic formulation business, that's been the cash cow for Ipca over the past few quarters and years. And that, in my opinion, is still expected to hold up with very strong growth and momentum that can get exhibited over the next few quarters. The third aspect in terms of their global tendering business, specifically the malarial contracts, what you've probably seen over the past few quarters and the expectations of the tendering process in which Ipca might submit, I think that can also have a significant say in terms of the overall valuations. So I think I'm not only perturbed with what numbers that posted. I think the numbers were pretty reasonable, but need to study it in further details, whether the management commentary indicated something else. But again, I think that decline again is something based on certain facts or profit being taken off the table, because the move on the stock has been substantial. But generally in this space, I think Ipca probably on the domestic formulation business looks extremely strong and robust.
Point taken. Mayuresh, the stock's actually rallied in last 1 year. It's up over 70%. Thanks a lot for joining us and taking us through your views on the markets and also sharing your fundamental picks with our viewers. Well, just a few minutes to go for markets to close. It's going to be a green closing, but it's about banking stocks all the way today. Let's head across to Neeraj to find out how exactly today's closing is panning out. Neeraj, when I was looking at the options data, it looked like the expiry will top out at 28,300, but we surpassed that level too on Bank Nifty.
Yeah, and well, so this one is holding fort, Navneet, and clearly shows that there have been some other disappointments, as a result of which the Nifty is lying absolutely flat. The Sensex about 1/3%, and the broader end of the spectrum, the broader markets, the mid caps, the small caps, the BSE or the NSE 500, those indices too, obviously not as strong as the Nifty buying, at least the BSE 500. The mid-cap index 0.5% to small cap index 0.9%. This has been doing rather well last few days. Let's take a look at the movers and gainers though, and the banks right up there, Axis and ICICI Bank. Add to that SBI and then Hindalco and Vedanta. That's essentially what moved on the index, though Infosys adds a little bit of weight by virtue of the weightage that it has, 1.2%. But look at the losers, couple of heavyweights out here. Bharti, not a big heavyweight, but down about 4.5%. That would be adding some pressure out there. ONGC adding a little bit of pressure in the session today. And HDFC Bank right down there, 1% down, would be amongst the top contributors, as likely would be L&T as well. So those are a few pockets that put some pressure in, which is why the Nifty was not able to do as well as the Bank Nifty was. But only the broader end of the spectrum, lots of stocks flying around, more gainers than losers, I would presume.
That's right, Neeraj. A good day for the broader markets, and in fact, a lot of results reaction also seen. So let me start off with something like TTK Healthcare, the stock which was up 20% in trade, locked in upper circuit, closing around those levels. If you go by the first quarter numbers, they turned profitable for the June quarter, where they reported profits of nearly 8 crore. Venky's was the other one. Good set of numbers. However, a bit of margin blip seen on year-on-year basis, but the numbers largely looked good. 4.5% higher for this one. Nalco came out with the numbers, and clearly this one had a good opening, a gap-up opening for the quarter. They reported highest ever EBITDA of 1,000 crores, 7% higher for this one. Sharda Crop was the other stock which was in focus. I think this one went up in the second half of the session, so closing with gains of 14%. DLF, watch out for this one. The company comes out with the numbers tomorrow. Ahead of that, some buying momentum seen, 6% higher for DLF, and also something like PC Jewelers, a beaten down counter. This one too comes out with the numbers tomorrow, and ahead of that, it's a closing around the day's high level of 12%, so watch out for PC Jewelers. And today's day belonged to the banking pack, so let me highlight a couple of them. Union Bank, Bank of India. Remember, the Nifty PSU banking index also was one of the top sectoral gainers for the day. On the losing side, again, result reaction. Cummins numbers were not good on the top line, bottom line. There was a degrowth, hence you saw that fall coming about. And also on the future side, huge amount of build-up seen on the short side. The other one was NMDC, which came out with the numbers post-market hours yesterday. Even the production and the sales number, which came out for the month of July, were not good. I think they were down 2% respectively. MRF numbers were below what the Bloomberg estimate was showing, though optically you would call it the numbers looked good because the EBITDA was up 2.3 times. The stock closing with cuts of 1%. And also some of the other stocks like Skipper, that fell in last hour of trade, I think, almost at day's low, 12% lower for this one. And Ipca Labs, we just spoke to Mayuresh also. He said the numbers looked pretty okay. Maybe there was something in the management commentary which did not go down well. And the stock also closing with cuts of 6.5%. Just want to highlight, this one touched 52-week high today. From those levels, it corrected after the earnings came by.
Well, so all in all, a pretty picture at close for the Nifty Bank. The mid caps and the small caps too doing well. The market breadth will come up on your screen. Would be positive, won't be surprised there. But I'm sure Navneet is interested in the turnover, and I'll get to that. Just remember the market breadth very, very flat. But the Nifty Bank expiry, weekly expiry, let's get the turnover up on the screen and see what's happened there. Yesterday was 9.9 lakh crores. Let's just see what the participation is today.
Yep, Neeraj, it's really on the higher side. 16.6 is a good amount of participation only when you got Bank Nifty options expiry day, and also coming at a time when Bank Nifty has been touching fresh highs. So we'll be starting the new week above the mark of 28,000 on Nifty. And plus the cash turnover, I can see it's crossed the 33,000 range in today's session. And well, we were talking about ICICI Bank, Neeraj. I think I would be interested to see the delivery data there, because the volumes as compared to yesterday was almost 4 times today of ICICI Bank.
Yeah, and Axis too, Navneet. I mean, ending the day as the Nifty gainer would be very, very interesting. State Bank of India, a couple of percentage points. It's just very interesting to see the delivery-based buying that we're seeing in a bunch of these names. And yep, those 3 banks right up there in the gainers list. Not surprised there, Navneet. Infosys too out there, and hardly any losers yet again.
Yeah, HDFC Twins look like some bit of profit booking now coming in, because these were the stocks which were contributing so far to the gains we've seen on Nifty. So something like HDFC Twins and also Kotak Mahindra Bank have taken a bit of a backseat. Some bit of profit booking has come in these stocks.
Yeah, for sure. Actually, bring up that point, Abhijit Pathak, the Nifty PSU Bank Index versus the private banks. How would you approach, or what would you think the charts are suggesting in terms of near-term levels?
To be honest, I am finding both a bit overstretched, and any fresh longs in either of them is not advised. And I would wait for a pullback and see which one pulls back towards support and how it acts to add those supports, and then only decide, because the complete move has been quite overstretched in almost all the banking stocks.
Okay, that's about the banking space. But Abhijit, what would be the approach for tomorrow's trading day be, considering tomorrow is the last day of the week and both Nifty, Bank Nifty closing at fresh highs?
Yeah, same like I said, 11,500, 11,520 is a big resistance. So unless that is crossed, one should look to go short at least on an intraday level, or maybe even buy some puts maybe over the weekend. And definitely no longs near this level of 11,500. And maybe if 11,500 is not crossed, I would expect a retest of the support at 11,400 going forward next week.
Okay, Abhijit, we leave it at that. No, thanks a lot for joining us today and taking us through the technical views on these indices and also on a couple of these stocks. But good going for the markets. Last few days have been good. This week so far has been good. Let's see how the closing comes about tomorrow. But before winding up this edition of Countdown, IKEA's first Indian store is now open to the public. The Swedish furniture giant's 4 lakh square feet store in Hyderabad has already set a new record, housing a 1,000-seater food court where Indian offerings from the likes of samosa and biryani shares counters with Swedish delights as well. Shailendra D'Souza spoke to the Idea India food head, the country head of the company, to find out just how much of the menu is vegetarian here in India.
Then we have 2 parts of the range. One is the Swedish unique range profile that we have, and one in all countries we try to adapt to the local range. So we have the local favorites such as dal makhni and biryani, and our Swedish favorites in all countries is of course the meatballs. Here we have adapted them, so we have chicken meatballs and veggie meatballs, and then of course we will sooner or later be a destination for salmon, I believe. That is non-vegetarian, of course. So we have a big mix of vegetarian, much higher vegetarian offer than we have globally.
Okay, and if you can tell me, what is your global split for veg and non-veg, and in India, what is your split for veg and non-veg?
In here it is 50-50, non-veg, veg, but if you count all articles, of course, including the cakes and everything, I think we have 70% vegetarian offers.
You're expected to open your next store in Mumbai eventually in the next 1 year.
Yeah.
Do we see you having a 1,000-seater store there as well?
I think we will see more or less the same setup as here, unless we have something that says completely different, of course. But the store in Mumbai have come pretty far, so we are copy-pasting a lot of things that we see here. And then, of course, from a range perspective, we will adapt it a little bit. And the forecast on different articles will be different, of course, because the taste profile is maybe a little bit different now.
Okay, so do we expect to have a vada pav in the Mumbai store?
I would not be surprised if we have that now.
Well, with that, it's a wrap on this leg of Countdown from Navneet and me and the team that put this show together. Thanks so much for watching.